Hello traders, this is day number 20 of the small cap market open test trading. So what that is a trading plan that I've written to trade the small cap stocks at the market open. Small cap stocks are notoriously volatile and unpredictable, so I've written a plan to try to defeat that, and hopefully we will prove it profitable after 100 trades. We've taken about 31 trades so far. We are slightly profitable at the moment, but it's too early to call it yet. And this morning, I didn't take any trades with it, and I'll show you why. It's just as important to know when not to trade as it is to know when to trade, maybe even more important. But I did take a trade, a day trade on SPXL, and I'll show you that. That is not part of the small cap plan, but I got it all on video, and I'll show you what went on with that. So let's take a look at the screener first. I want to show you how I picked these small cap stocks to trade. So I start with my small cap screener. Always click those three dots and click modify, otherwise the filters will not be applied. And then I organize the list by volume, and I'm only looking for stocks that are going up in price, so they must be green and a percent change of 5 or more. But there's also some strict chart criteria that must be met in order for me to look for trades. For example, NRXP, although it looks good on the screener, did not meet my chart criteria. Same thing with KORE. So let's see if what I was looking at is still up here. I'm not sure, but we'll go to the video and you'll see what I was watching and why I did not take a trade this morning with small caps. So here's the video from the market open this morning. I was watching HLBZ. It never broke out above its previous session high, so there was no trades to take there. Whoops, there's that SPXL trade. So here is the small cap trade that I was looking to take. Sorry, I fast forwarded right through it. It's with XENE, and it popped up on my screener around 9:44. It was trading with pretty low volume, so it was not on the screener before that. So by the time it popped up on the screener, it had actually already given me an entry, which I missed, and I think it already went to 2R as well. So whenever that happens, then I cannot take a trade because I've already missed my entry. And once that has occurred on any stock, then I just do not trade small caps for the rest of the day because something kind of happened without me, and I don't want to, okay, let's look for the next opportunity and try to find something because I feel bad about missing this trade. That's the kind of thing that newer traders do. That's what I used to do when I was a new trader. You get FOMO and you feel bad that you missed a good trade and you start looking for something else, and more often than not, that generally ends in a red day. So I'd rather say, okay, look, something happened without me. It met my criteria. It was a successful 2R trade. It shows that my plan works, but today the market was not aligned with my plan. And what I mean by that was that it did not pop up on my screener until a little bit later after the pattern already played out. And that's going to happen. You're going to miss a lot more opportunities than you catch. And the worst thing you can do when that happens is to revenge trade and start to look for some random trade to take and try to make that trade that you missed or something. So anyway, I was all done with my small cap trading at that point, and I was looking for a trade on SPXL. And let me show you, let's see, what I was looking at here on the 5-minute chart. And then I screwed up the entry because I was kind of messing around with that XENE trade, and I'll explain what the mistake was and what difference it made. So with SPXL, the reason why I was looking to take a trade was because it gapped up on the daily chart. It gapped up overnight, basically. And usually, now this isn't tested yet, so don't take this as like this is a proven system. This is something that I'm experimenting with, and this is why I'm only trading with one share when I do it, because I haven't proven it profitable yet. But I've noticed that oftentimes with SPXL, which is an S&P 500 ETF, so the same is true of all S&P 500 ETFs and the S&P 500 itself, is that when the daily chart gaps up, that I notice let me just show you really quick here on, we'll pull up SPXL. Yeah, here it is. So let's look at it on the daily chart, and you can see how it gapped up compared to yesterday. So whenever I see a gap up like that, there's another one there. I've noticed that there is usually an opportunity for day trading, but again, I've only done this a couple of times. SPXL is something I normally swing trade in a very different way as well. But these gap ups I've noticed provide good day trading opportunity so far. So I'm just testing that now with one single share. So let's get back to the video and I'll show you what I was looking for. So I wanted to see this high of day that was established here in this first candle. I wanted to see that broken because you could see that even though it gapped up, it started selling off at the open. So that was going to be my first signal to look for an entry, is just for it to break over its high of day. So now I was waiting for a pullback, but what happened was I got into this XENE trade and I was messing around with it, and then I looked back over here and I thought I was still on the 5-minute chart, and I'm saying, oh, it's giving me an entry right now and I'm missing it. So you're going to see me take a position right here, and this was an error entry because it was not on the 5-minute chart, and you'll see that in just a moment too. Let me fast forward here. So you can see on the 5-minute chart where I bought in, it's kind of like a ridiculous entry because it's right in the middle of the ascending part of an ABCD pattern, which is not a good place to enter because you could get easily stopped out on the first pullback. So I screwed that up, but it did work out, and the ideal entry that I would have taken if I would have done this properly also worked out. So it ended well, and I recorded the trade on my spreadsheet as if I took the proper entry, just so that I know whether or not this system is going to work, because that's really all I'm interested in, not, did my specific trade work. It did work, but it wasn't a good entry. So I want to see if, when I do it properly, does it work? So here's what I was looking to happen. Let me here it is right here. So this is what I meant to do was, so here is point A of the ABCD pattern, here's point B, and now here's the pullback on the 5-minute chart that's establishing point C. Point C will be the new low after this high, and that low is established in my mind when a 5-minute candle, in this case, makes a new high. As soon as a 5-minute candle makes a new high, then whatever the low previous to that, that is point C. And when that 5-minute candle makes a new high, that is when I want to take an entry. So you're going to see it happen on the following candle, which, let's see, it's still 20 seconds, about 15 seconds away. Let me see if I could fast forward without skipping over it. There it is right there. All right, so about 8 seconds here, you're going to see the 5-minute candle pop up. And as soon as it breaks over this level, that's where I would have wanted to get in. So right there, probably around 114.55. I marked it out as 114.54 on the chart. That was my ideal entry. I got in at 114.40 by mistake because I thought I was looking at the 5-minute chart and I was looking at the 1-minute chart. So that explains that. And then my original stop loss, again, was based on the 1-minute chart by mistake. But the stop loss, had I entered correctly, would have been here at 114.28. So I entered everything on my spreadsheet as if I would have gotten the ideal entry and my stop loss, again, just to record how well the plan works that I'm working on for day trading SPXL. So let's fast forward and see what happens here. So now here I'm marking out the ABCD pattern. So here's point A, point B, point C, and then we're waiting for point D to form. And we'll know once we've seen a new high, and we only know that it's a new high once it starts pulling back. So it's looking like this is going to be point D. I think it stays that way. I'm not sure. Yeah. So now what happens is this is basically a new ABCD pattern. Here's A, here's B, and here's C. It all happened on one 5-minute candle, the pullback. So when that happens, I move my stop loss up just below the new point C, and I just keep doing that until I get stopped out. And let's see what happened today on SPXL. It gave me quite a few ABCD patterns. Here is my 1R, 1 times my risk, or my risk is 26 cents, based on my ideal entry and my ideal stop. So this way we can figure out how many R we made. And it looked like I was about to get stopped out here, but again, just sticking to my plan, which says to place my stop loss just below point C. And then we've got another ABCD pattern here with a much deeper retracement, ABC. Now this is where a lot of traders will say, okay, this thing is weak, I'm going to get out because it's such a deep retracement. I don't follow any of that stuff. I just let the trade play out. And as the point C moves higher and higher on each subsequent ABCD pattern, I move my stop loss up until it stops moving higher, and then I get stopped out. So it would have been very unfortunate if I would have read this as, okay, this means that this thing is weak now and I'm going to get stopped out, so let me just get out now. You'll see what ultimately happened on this trade. So this is why, like, instead of trying to predict strength or weakness based on a retracement level, I just let my trade system play out. And when I'm day trading, that means that it either hits 2R or hits my stop loss. And in this case, with these SPXL day trades, I just like to follow the ABCD pattern up the 5-minute chart as long as possible. And you'll see what happened because of that. So remember, this is where it was looking like it's going to get weak, and look where it is now. And it gave me a new point C to bring my stop loss up to. I do have a video on the ABCD pattern where that's all I talk about for the whole video. So if you're not sure what I mean by all this stuff, check that out. Let's see here. So now moving up again. So here's another pullback. So I was able to move the stop loss up again. Fast forwarding. So this was a really long trade, but you know, it was a good experiment, a good test of this trading plan. And this is really only the second time I've done this with SPXL. So I'm way too far away from going to any sort of full position size, but I'm collecting the data. And I'll show you that at the end here. So this thing went all the way up to like almost 116.50. I was in at 114.40. So I almost caught $2 of this move. I think I was about 20 cents shy because I did get to move the stop loss up one more time, because this thing started to break out again. So it made a new low again. There was about 7 or 8 ABCD patterns on the 5-minute chart as this thing moved up. And you're going to see my stop loss get hit here pretty soon. So there we go, stopped out. I think I got filled at 116.18 instead of 116.19, which is absolutely fine. But let's go back really quick to that area where we were looking at it as getting weak based on the price action. So over here, we were looking at this retracement. So after a pullback here on this red candle, it retraced about maybe 90% of the way back. So you could read that as, oh, this thing is getting really weak, let me go ahead and get out. And you get out around 115, and instead we were able to get out around 116.20. So we caught about another $1 to $1.10 of a move per share. So that's the beauty of, you know, having a plan and sticking to it, no matter what you see play out on the chart. If the criteria to take your stop has not been met, there's no reason to move it up and stop out early. So that is the point of showing you that SPXL trade. It is nothing like what I'm doing with the small cap trading. It's trading the ABCD pattern using the 5-minute chart, and there are some strict criteria that must be met on the daily chart for me to even look for the trade. This is not something you could just do every single day. The S&P 500 ETFs often chop around, or they'll head straight down, or, you know, relatively straight down throughout the day. So you can't just take like the first 5-minute candle that makes a new high every day and expect this to happen. But I'll let you in on more details as I develop this plan. Let me show you. I don't really have an official spreadsheet for this yet. I just kind of copied my small cap spreadsheet over just so I could start recording this data. I'm going to clean this up later and make it specific to these SPXL day trades, but you can see this is today's trade, and we made 7.3R, 7.3 times our risk on the ideal entry. On the actual entry, we made even more, maybe like 8R. And then the last time I did this was back on October 7th, and there is a video showing that trade as well. And that one we only made 2.8R, but still 2.8R, that's pretty good. So liking how this is working out so far. SPXL, obviously it's going to be a lot harder to get to 100 trades. So maybe after 10 trades, if I'm looking like this thing is pretty likely to remain profitable, I will increase my position size on these SPXL day trades, because they're not going to happen every day, that's for sure. So anyway, hopefully this video was helpful to you. No matter what you're trading, whether it be an ETF like SPXL or small cap stock or options or whatever, I strongly recommend that you have a plan going into every single trade, and you only enter the trade because it meets your plan criteria. Then once you're in the trade, you stick to that plan no matter what, just like I did today with SPXL. And then always take your stop losses, honor your profit targets, and in the long run, you should be green. Take care.